When the market goes down, does it ruin your day? When you read all the headlines and see all the noise out there, does it make you wonder about how is this going to impact my retirement? Well, watch this video and find out how normal it might be. Hi everyone, it's Logan Sadler, financial advisor here. Thank you for stopping by the Financial Beat YouTube channel. In today's video, we have a great video prepared for you guys today on market volatility. It's been a very hot topic. As I've said before, I am a financial advisor. So meeting with lots of different people just like yourselves, knowing that this has always been a big topic for most of you as far as what am I supposed to do during this market volatility we're currently experiencing. Now, the best part about this video is this is gonna be pretty relative depending on whatever time you're gonna look back on, because it's not super specific on what's going on today, just a great look back on what happens during market volatility and how normal it is, okay? So let's go ahead and take a dive. I actually found this chart on Y Charts, okay? I stumbled upon it on social media and it is a great chart. We're gonna pull it up here and talk through it. It goes over the S&P 500. Okay, the S&P, for those of you that don't know, is the top 500 stocks in the United States. Okay, so a very good indicator of what to expect and a very good indicator as far as the overall economy, as well as just the stock market in general for the US. So this tells you since 2009, okay, that's right after the financial crisis. This is going back, for some of you that don't remember, 2008 was the big financial crisis that a lot of people that were invested at the time definitely remember. This is going back since then. So since 2009, this chart shows that there has been 8 different market dips below 10% or more than 10%. So when you look back over a 12-year period, the market has lost more than 10% 8 times. I mean, that's pretty shocking for most of you watching this video. It is a pretty good, crazy statistic to show that market volatility is totally normal. It happens all the time. The market goes up, down, sideways, and sometimes we don't know which way it's going to go next. But it's very important to know the market always does have those ups and downs. Now, how you're invested and what your emotions should feel during that, we'll dive in a little bit deeper as well. But it's important to note that throughout this whole time, from 2009 until now, again, 8 different dips, more than 10%. Okay, some of them, as you guys can see here in the chart, are even more than 10%. The one in 2018 was almost 19%. And then we all remember the COVID one back in the 2020s there to show you that one. Now, let's talk about the S&P. So during all of this volatility, there has been a time where the S&P came from, which is in this chart, came from roughly 960 to now it's worth over 4,000. So, I mean, the growth in the S&P has been tremendous, even with all this volatility. So it shows you how normal the volatility is on the way up, okay? Now, the next bullet point I wanted to talk about in today's video is when you're looking to invest in the market, it should never be short term. You should never be putting money in the market for a 6-month stretch because you need to make some extra money in the meantime. The market is definitely a long-term play. It's a long-term investment. Now, some of you guys watching the video that might just be new to the market and got into it maybe a year or 2 ago, you basically could have thrown money in the wind the last few years and the market's performed well. That's not always the case, as that chart I had up a minute ago shows you. What you really want to do when you're investing in the market is you're looking at 5, 10, 20-year increments where the market has performed successful in the past over those timeframes. So it's very important when we're investing in the market to think long term. Okay, those of you in the market and have been in it a while, remember it doesn't always go up for an extended period of time like it has the last few years. So it's important, again, to look very long term when we're talking about the market. The next, the most important thing that I wanted to touch on, those of you that are 100% in the market or have a significant amount of your retirement savings in the market and you're getting closer to retirement or you just retired, that is a very crucial time. And some of you watching this video might see that chart and say, yeah, I know it goes up, but it makes me really nervous. I have all my money in there. I'm thinking about getting all out of the market. I don't know what to do. You know, all these thoughts that run through our head, that little person sitting on our shoulder telling us, you know, a lot of those bad thoughts in our minds. What's really important is if you are one of those clients or one of those people watching this video that does get nervous during the market volatility, it's really important to make sure you have a comprehensive plan. We've talked about planning a lot in some of our other videos. If you haven't checked those out, head over, check them out. But comprehensive planning is looking at something that's built to last and also has not all your eggs in one basket. For those of you watching the video, again, that have all your money in the market or a significant amount, and you're seeing this up and down and say, okay, I just can't handle it anymore. I don't know what to do. There's several different ways, especially for retirees or pre-retirees, to offset risk, okay, or to reduce overall risk. Some of the main ones out there that are very, very common right now is structured notes. That's a very great way to offset some of the risk and limit downside. Sometimes you can have actually some downside protection and still have some pretty decent earnings in the good years. There's also fixed income. Bonds, treasuries, a lot of those traditional holdings are a good way to offset risk. Again, what I'm talking about isn't for all your money. It's just a good way to offset some of the risk. The third one that is another common one that is very useful for those clients that are fearful of the downside of the market. You could take a chunk of it and use the FIA, for example. The fixed index annuity is a great way to offset some risk while still having some of the potential upside of the market, as well as being able to provide the guaranteed lifetime income and things of that sort that are very popular with those that can be a very efficient way to offset the risk, the fixed index annuity. There's other things like real estate. Real estate's another great asset class to get you a little bit outside the S&P and diversify a little bit outside traditional markets. So, and as well as there's cash equivalents. That's another one. Cash equivalents are a very great way. CDs, cash, all those things are very great and important for offsetting risk. Again, each of those things I mentioned isn't for your whole retirement plan, but you have a comprehensive plan that has maybe a mixture of 2 or 3 of those, or in some cases, I've seen it where it's all of those. It typically allows you as the client to feel a lot more comfortable as far as, okay, the market's going up and down, but I also have this other pile of money or this other investment that's doing the opposite right now. It's protecting me. So it's very important, if you are one of those clients that does get spooked during volatility, to make sure you're offsetting risk and making sure you're properly diversified amongst other asset classes. The other thing is to make sure you have a good financial advisor. You want to make sure, if you guys do have a financial advisor, or if you don't, looking for one, handling market volatility is a lot of what the advisor's job is to make sure they're managing your expectations and to make sure that they are being that comprehensive planner and being able to walk you through these inevitable market volatilities that we're going to see, or we have seen, and that we're going to continue to see. So I appreciate you guys stopping by to watch this version of the Financial Beat YouTube channel. Go ahead and click subscribe. Again, doing videos each week on different contents, and looking forward to seeing you guys next week. I'm Logan Sadler. See you guys soon.